Hey, what's up everyone? Tim Reset here, and I wanted to do just a video touching upon the soybeans futures. And in a trade here, short from 1431.25s. And one thing to notice on the dome is that the prices trade in quarter increments, but they're actually quoted on the dome in terms of the way they're quoted in the pits. So you have 0, 2, 4, 6 to correspond with evens, 25s, 50s, and 75s. So that's the way the dome is set up on Infinity and most of the order execution platforms. They quote it the same way as in the pit. In terms of trade setups, shorting the low of the high bar. In this case, I was back at 9:52, and today is the 26th of November. So short from 952s, below that at 31 and a quarter. As noted here, my stop is currently above the high of the prior bar up here at 30 and a quarter. And then as soon as this bar closes, and the next bar forms and begins to break lows, I can take my stop from 30 and a quarter, drag it down here to 28.5, and continue to trail my stop. The other scenario would be that price begins to rally, comes up, and takes us out of the position. So that's kind of, using that trail stop is really handy, especially on soybeans, because the market tends to run very fast, very quickly. So currently, in 15 or so pips in the money, ticks rather, in the money, and just looking to manage the trade from here. There's not really a whole lot to do once you're in the trade other than manage your stop. So I think that that's one of the reasons I really like the more mechanical style of trading, because it does remove a lot of the subjectivity from your trading, and when you're in a trade, it's much easier to execute on the trading principles that you have set up if you keep things much more simplified. So we'll give it another minute or two to form the next candle, and if that candle does break the low, then I'll go ahead and drag my order. And with Infinity, you can just click and drag. It's pretty simple. So I've got one contract left here, and we're going to just sit and wait. I have a couple of minutes till this bar will close, and then these are 4-minute bars. The entry candle was nice and small, only 3/4 of a point. So now we've got the 10-12 bar closed, and the high of that candle was 28.5. So that's down here, 28.5. And once we break lows, if we break lows by at least 2 ticks, then I'll go ahead and move my stop from this bar here above the high at the 28.5. So now it's just a waiting game, and we'll see if we can continue to break lows and manage the trade. Other than that, the euro has been pretty slow today. ES had a couple of setups but wasn't doing a whole lot. So another reason why I like the soybeans is it's an uncorrelated market relative to the ES and the euro, the other two markets that I trade. So it makes for a real nice balance to have multiple markets that you're trading and multiple markets that are uncorrelated, because when the ES is slow, the soybeans might be moving. When the soybeans are slow, the euro might be moving. There's really not a day where most trades are slow and not moving. So since we've double bottomed here, I'm going to go ahead and bring my stop down to 28.5. And actually, the high here is 28 and a quarter. I'm going to put it one tick above, so 28.5. And that would be right here. And the reason I'm doing that is because we have double bottomed and started to bounce. If we break this prior candle, this candle would then be a reversal signal or reversal candle. So if that does occur, what I will also do is flip the position and go long. So in the meantime, stop is at 28.5, and it looks like we may not break that. Looks like we'll continue on lower. So as I'm also managing my stop, I'm paying attention to the candle range. In this case, this candle is 1.25 points. And if the candles are within 1.5 points, I'll go ahead and flip the position and take a long position if I'm closing a short, or taking a short position if I'm closing a long. So in the meantime, 28.5 is where the stop is, and if we do bounce, I'll just add another contract to flip that and go long at that stop. So it would be take me out of the position and be a buy stop at the same time. So, and here we go. It looks like we're starting to tick a little bit lower. And so there we go. So just going to continue to trail my stop here, and right now we're at 28.5, locked in about 2, 4, 6, 8, 10, 11 pips on this setup here, and we'll just continue to trail down until we get taken out of our stop, and that's really all there is to it in terms of trade management. So I'm going to go ahead and I'll just pause the video, and I'll come back towards the end when things are picking up a little bit more. Alright, we're back. A couple more bars have closed, a couple more lows have been broken, so my stop is now at 27s. It's 27 evens, and looks like we may get taken out finally here. And if we do, this bar, that 1020 bar, is outside. It's larger than 1.5 points, so I would not be looking to flip the position and going long and take a long position from here. So right now I just have a stop on the last contract, and if we do get taken out at 27 evens, then that'll be the end of the trade. And you can see how, the soybeans, very smooth and fluid motions with their rallies and pullbacks, and that's the reason it makes for really great intraday trading. When you have, both volatility mixed with smooth trends, that makes for great opportunities because you can capture the moves repeatedly over and over again. So there we go. That's the short we had on the soybeans this morning. Roughly, from 950 down here to 1020, so like a 30-minute trade. That would be about the typical length, roughly, of soybean trades, and it doesn't take a whole lot. Up 32 ticks so far this morning, and that's not trading any not trading very big size at all. So the soybeans is a great market to trade, and it's a great market to look to almost automate in some ways, or create mechanical systems for, because it's a great volatile but smooth and fluid market. So hope you enjoyed the video, and if you have questions, feel free to leave them below. Thanks. Have a good day.